What's up, everybody? Welcome back to the channel. I am excited to do this video for you guys. As you guys can see, I dropped a poll on my community tab. I asked you guys which ICT video should I drop next, and 50% of you guys voted that I should do a daily bias routine talking about liquidity and ICT PD arrays. So that is what we're going to be talking about in this video. If you guys will be so kind to drop a like and subscribe to the channel, you guys, that is one of the best ways to support my channel, and it really lets me know that if I'm doing the right thing or not, if I'm giving you guys some good content. Let's get straight into this video, you guys. So the first thing I like to do, right, and I made a small little checklist for you guys right here, but the first thing I always do, so today is Saturday, right? So starting off the week, I like to always be aware of the news calendar. And mostly what I'm looking for on the news calendar is red folder news. And I'm also looking for bank holidays, right? Because red folder news is going to create some volatility. And those gray folders, which is typically a bank holiday, those are going to create, nothing, right? It's going to be a lack of volatility, right? So if you guys will look at this calendar that I have put up right here, you guys can see Monday, November the 24th, we don't really have any red folder news to really pay attention to. So that day is probably going to be a really small range day, right? And we're going to talk about how I use this calendar to, figure out the ranges as well. Then we have Tuesday. Tuesday, we have core PPI coming out at 8:30. I think Tuesday is going to be a little bit of a tricky day to trade, mainly because Thursday is Thanksgiving, right? So if we look at Thursday, right, we got some volatility coming in on Tuesday. That could be a bunch of chop. And then we have Wednesday, November the 26th, the day before Thanksgiving. We also have a red folder event right there as well at 8:30. It say unemployment claims. And then we have core PCE price index, right? That red folder is coming out as well. So I'm going to be honest with you guys. When it comes to these red folders, I don't even know what most of this stuff mean. I just like to keep up with it because it's important to be aware of, for one, when these news events are coming out, especially if you're trading prop firms, where some of these prop firms, they don't even allow you to trade like 5 minutes before the news or 5 minutes after the news. So for one, if you're a prop firm trader, you want to be aware of the news, but also if you're a trader in general, you want to be aware of the news because obviously you don't want to be placing your trade when, NFP or FOMC news is about to come out, and then you could be on the wrong side of that trade and potentially lose a lot of money, you guys. So that is step one in my routine, you guys. And mind you, this is all, me talking about how I set up my daily bias, right? We're going to eventually get to that, but I have to show you guys my routine and how I even get to that part in the first place, all right? So the next thing I'm going to talk about is the higher time frame top-down analysis, all right? So for me, you guys, I do a real high time frame top-down analysis. I like to start off looking at the monthly chart, go down to the weekly chart, daily, right, and then 4 hour. Now, obviously, I do check other time frames as well. I check like the 2-week time frame, the 3-week time frame. I check the 2-month, the 3-month, right? I pretty much check everything, and whichever one looks the cleanest, that is the one that is going to really make a lot of sense to me, all right? So, for example, I'm going to give you guys an example right now. If I'm looking at this monthly chart, this is the monthly chart for the E-mini NASDAQ futures, right? This chart is going to be extremely important. Why? Because this monthly candle right here have not closed yet, right? So we really want to wait for this monthly candle to close right here so we can really see if this is going to be a swing high, right? This little thing right here is going to be a swing high. So the reason why this monthly candle closure is going to be important is because this monthly candle closure right here is going to potentially give us a swing high right here, you guys. So when this monthly candle closes, we will now have a swing high, and then we already have a swing low, right? So now we have a range that we can work with on the monthly time frame, right? This is all one big range. We got swing low, swing high, right? So that is important because that's going to give us a lot of information. And as you guys can see, right, if we have a range, we're obviously, like, let's imagine if we was using our Fibonacci tool, right? Let's say this is our Fibonacci tool. and then we're looking for 50% of this range, right? So now we're looking at the monthly time frame. We can assume that all of this right here, all of these lows, right, are going to be liquidity on the higher time frame, right? All of these little lows right here is going to be liquidity on the higher time frame. Like I said, you guys, be patient with me in this video. I'm giving you guys a lot of good information. You just have to work with me, all right? I'm giving you guys not only the daily bias, but how to form a monthly bias and a weekly bias as well. All right, so the next thing that I'll do is pretty much the same thing. So the next thing that I do is pretty much the same thing. I will go on the weekly time frame and I will map out, some of my key areas, right, that is important to me on the weekly time frame, right? So if we're looking at this weekly chart, right, there's some important things that I want to know, right? So the first thing I'm going to note right here is this little wick down here, right? This little wick, right? I boxed up this little wick right here, right? And the reason why I boxed it up is because if you guys look at this weekly candle that was just closed, yes, we came down and we swiped liquidity, right? We came down here, we swiped liquidity, but this candle did not close, right? The body of this candle, right? The body of this candle, right? This candle right here. The body of this candle did not close below this wick, right? So that is going to be very important. Why is that going to be very important? Well, because that is a liquidity sweep, right? The difference between a liquidity sweep and a liquidity run, if this was a liquidity run, then I will be betting that the next week to come, right, this week to come, and maybe the next week after that, we're going to probably continue to the downside. But because this, wick through this liquidity down here, and then we close back above, this is going to make me go to like a daily time frame and say, maybe on the daily, we're going to start to go back up and sweep some liquidity on the daily, right? So understand, we're still in phase 2 of my routine. We're doing the top-down analysis on the higher time frames. So now I will go to the daily chart and I will say, okay, we closed pretty strong. What do I have to go off of on the daily chart? Well, the first thing that I can look at right here, if I'm using ICT concepts, is this right here, right? We have this little daily order block that we already reached into last Friday, right? We already reached into that last Friday. And that's going to be important because now if the market is going to want to start retracing higher, maybe it wants to break through that, but I don't really think that it will. I think that, we're going to be working within this range at least Monday, maybe Tuesday as well, right? So I can see the market wanting to do something like this, go maybe a little bit higher up into here, touch the midpoint, right? Maybe even break a little bit higher out because the stop loss for this order block will be right up here at the top of this order block, right? So maybe we want to work up here and start creating some more liquidity for the weeks to come because the market has to create liquidity. You guys have to remember, it just dropped 1,000 points, right? So typically after a really big drop, we're going to see some consolidation, right? So I wouldn't be surprised on the daily time frame, if we hang around this range right here, right? I'm going to move this box, right? But let's just say the price may just want to hang around this range for a whole week or two, right? And if you look at this range, this is a whole 1,000-point range. So it's not too far-fetched to say, price might want to hang around here for at least a week or two, right? So, and then obviously after that, if I was actually going into the day, then that's when I start looking at like the lower time frames, 4-hour, the 1-hour time frame, and everything like that. But we're going to save that for later in the video, you guys. And then obviously, when I'm looking at the monthly, the weekly, the daily, right, the 4-hour time frame, the things I like to focus on is the wicks, you guys. I like to focus on wicks. I like to focus on new week opening gaps. I like to focus on new day opening gaps, opening range gaps, and sometimes I will use the first presented fair value gap. Those are the only things that I primarily use, you guys. So when I'm looking at these charts in real time, you know, I don't have anything on these charts that I'm showing you guys right now. But when I'm looking at these charts in real time, I don't really trade them. Like, for example, I'm going to give you guys an example. There's nothing wrong with if you do it like this, right? Because these are the higher time frames. But so like right here, we have a fair value gap, right? Right here, we have a fair value gap right there. So I'll just mark that out. Now, it's nothing wrong with using this on a daily time frame, but for me, on my actual charts that I'm using to trade, I'm going to have something else on my chart, and it's most likely going to be like a new week opening gap, right? It might be right here, it might be somewhere else, right? But it's going to be a new week opening gap or a new day opening gap, right? And let me show you guys. Let me teach you guys, just in case you don't know. I know most of you ICT students already know this, but the opening range gap forms on 5 p.m. Eastern Standard Time, right? The close at 5 p.m. Eastern Standard Time from the open at New York, right? 9:30 a.m. New York Open Eastern Standard Time. And how you find the opening range gap? All right, so first thing you have to do is you have to click on this button right here on this button right here, right? On your trading view. You have to click that button, right? That button is going to take you to a screen. It's going to pop up like this, right? So when you click that button, it's going to pop up, and then you will see something that says session, right? Right here. It says session. And then once session pop up, you're going to have to change it from regular trading hours. You're going to have to change it from electronic trading hours to regular trading hours, right? And then that is how you find your opening gap range. Now, opening gap range is very important, all right? Make sure y'all write this down. Opening gap range is very important for finding the daily bias. It's important for finding like everything. That's why I use it so much. New week opening gap, in my opinion, it's just like a very strong fair value gap, right? So that's why I use the new week opening gap. And you can find that from it's Friday's closing price to Sunday's opening price, right? So when the market opened Sunday at 6 p.m., and then I believe it closes at like 4:30 or 5 p.m. on Friday, sometimes it makes a gap, right? You don't have to go change it or anything on your trading view. All you have to do is go look at your future chart. Sometimes a gap up, you will put the bottom of your box on Friday's closing price, right? So like for example, if it gaps up, then you have to use Friday's closing price, and then you're going to use Sunday's opening price. If it gaps down, same thing. You're going to use Friday's closing price, and you're going to use Sunday's opening price, right? Same thing. So these are some of the main PD arrays that I use, and I think that is very important, you guys. This is very important, right? This is something that I wish ICT would have told me, you know, when I watched all of his videos, because he have a million different things you can use, and granted, you can use all of those things. You can use breakers, you can use order blocks, that's fine. But I'm telling you guys, the strongest PD arrays in ICT arsenal are going to be wicks on a higher time frame, 4 hour and up, right? 4 hour and up. It's going to be the new week opening gap, the new day opening gap, the opening range gap, and the first presented fair value gap. You guys don't take my word for it. You have to go back test this on your own so you can understand what I'm talking about, all right? Now, number 4, right? And this is how I form not only my daily bias, but this is how I pretty much find trades at any time I'm taking a trade. And this is very important for you guys, right? Because some of you guys may not have identified what type of trader you are yet. right? Me, I am a scalper and I am a intraday trader. So a scalper is somebody who's only looking for a small piece of a move, right? Sometimes 20 or 30 points, right? That's a scalper. Don't want to be in the trade for too long. An intraday trader is someone who is trying to find the whole range for the day, right? Not catch the whole range for the day, but it's somebody who's looking to say, okay, we're going up for the day. I want to position myself down here and try to ride it up as long as I can. And maybe I'm going to hold this trade for like maybe an hour, 2, sometimes even 3 hours, right? That's an intraday trader. The reason why it's important to know the difference, you guys, is because when you're scalping, you need to be using lower risk, right? You need to be using lower risk, and you do not need to try to scale into scalps. Do not scale into scalps, you guys. That is so important. I had to learn this the hard way because I kept blowing accounts. I kept blowing my prop firm accounts, and when I was going over my trades, I was realizing I was putting too much risk on the days where I should have just been either not trading at all or just taking a real small profit and then being happy and just walking away, right? But when it's the intraday move, like that 1,000-point move that I called out last Thursday or Friday, I think it was Thursday or Friday, that's the trade where you could start off risking about 1%, and then when the trade starts to go in your direction, that's when you learn how to scale into that trade. That is so important, you guys. I wish I could really emphasize how important that is. You have to know what days are scalping days and what days are days where you can go for a bigger move. And the way that you're going to do that is knowing your weekly calendar, right? Knowing when the news is coming out. Because like I just told you guys, and I'll give you an example again. Like for this week that's coming up, we have core PPI on Tuesday. Now, for me, this is just mostly experience. I just feel like that's going to be a choppy day. I'm just going to be honest. There's going to be some volatility there, but I feel like it's just going to be choppy, right? Monday is probably going to be very slow. Monday is probably going to be like, it's going to give you a very small move, right? You have to take that and be happy and walk away, right? Tuesday is going to come with the volatility, but it's going to be a lot of fake outs, going to be a lot of liquidity that have to be built, right? Because that's why the market is going to be choppy, and that's why it's going to be, faking everybody out, because it has to build liquidity. And then obviously down here we got Wednesday, right? We got Wednesday. Wednesday it has some red folder news, but it's nothing too crazy. And then obviously that's the day before the holiday. That's why I think that's going to be the best day to trade this week, you guys. Don't take my advice. Just listen to what I'm saying in this video, and during this week, come back to me and tell me if I was right or if I was wrong, right? That's all you got to do. And then last but not least, you guys, time and price. Time and price. Time and price. This is so important. So many of you guys who've been studying ICT, you guys know what the fuck you're doing. But the problem is you know what you're doing so much that you're doing it too much. You're trying to go to Asian session. You're trying to go to the London session. You're trying to trade pre-market. You want to catch the afternoon session. You need to stop. Take a deep breath, calm down, and relax. Time and price is everything, you guys, right? The market moves off of liquidity. Liquidity controls everything. So you need to be waiting for 9:30 New York Open and trade it up until 11:30. That's it. If you can't find a good setup within those 2 hours, walk away from the market and go enjoy your day. Trust me. Trust me. Trust me on this one, you guys. So that is my advice. Like I said, we can go look at these charts one more time but before I walk away, you guys. So what I'm going to be looking at every time is wicks, right? Wicks. I don't have any of my new week opening gaps on the chart. I don't have any of my new day opening gaps on the chart right now because it would have been just too crowded for me to leave all of that stuff on the chart for you guys. right? But I'm going to be looking at wicks, right? Now, so obviously this is the monthly candle right here. This little red candle, this is the monthly candle right here. So we haven't closed yet. We have one more week before this month is going to close. So this is going to be very important. But I do think that this monthly candle is going to want to close below this swing low right here. I don't think we're going to want to close below this one, but I do think we're going to continue to go down and take out this swing low right here. That's what I believe. Right? So I'm looking at the wicks, and I'm finding liquidity, you guys. Always remember, liquidity is everything. If you don't understand liquidity, there's no point of even trying to trade ICT concepts, because nothing else is going to work. All right? So, and then like I said, you guys, if we look at the weekly time frame, I'm looking for the wicks. I'm looking for the wicks, you guys. Where are the wicks? Where are the gaps? Obviously, right here on the weekly time frame, right, we have this fair value gap right here. Right? It's very small, but it is a fair value gap. Right? It's and that's the gap right here off of this candle right here. Right? So we do have this fair value gap, and then we also have this little order block on the weekly time frame as well. These two red candles make one order block. And it appears that the price have already came down here and touched it one time. Right? So I do use order blocks. I wasn't trying to knock order blocks, but I was just trying to reinforce the idea that new week opening gaps are going to be way more important. But obviously, if you're using order blocks on the higher time frame, that's those higher time frame order blocks and fair value gaps, those are important as well. Right? So obviously we did come down here, we touched into that order block right there. So it's just, I just think that price is going to want to continue to work lower, right? Because it's very bearish right now. We just broke through a very significant level, which is right here. We had a order block right here that was just, violated, right? So that's very important information to take in. We violated that order block right there. So I do think that alone is telling me that we're more than likely we're going to continue to come down. Right? So this is how I form my analysis, you guys. If you guys are trying to form a daily bias, the first thing you have to identify is what direction is the market moving in. Right? What direction is the market moving in? Obviously, we're coming down. And then once you figure that out, then you have to find your swing highs and your swing lows. Now, until we get a close on the daily time frame, right? Until we get another candle to close right here, we don't have a swing low right here. Because the swing low is a 3-candle pattern. Like this right here is a swing low because we have a candle to the left of it and then we have a candle to the right of it, and both of those candles are higher than this wick right here. So that makes a swing low. But right here, we don't have a swing low yet. We have a swing high, but we don't have a swing low. And the reason why that is important is because we have to figure out what range we're trading in as well. Right? So if we go lower Monday, right? If we go lower Monday, let's say we go lower, right? This is our swing high, and let's say our swing low is down here somewhere, right? And this is our range on our Fibonacci. Now 50% may be around right here somewhere, and that's important because maybe this order block right here is going to be respected. Right? So, but we have to wait for all of that information. Right? So it's very important to wait for that information. Wait for, swing highs and swing lows to be created. And then that is how you guys are going to go form your daily bias, figuring out where is the liquidity, right? Because on this daily time frame, all right, where is the liquidity? Well, if you guys take a look, right, we already purged out a lot of liquidity, right? If I already showed you guys the monthly chart and the weekly chart, you guys see we purged out all of that liquidity on the monthly and the weekly chart. So now this right here is looking like relative equal highs, right? This right here is looking like relative equal highs to me, right? When I'm looking for liquidity, I like to look for a pool of liquidity, right? So a pool of liquidity is going to look something like this. You see this? It's like a little U shape in here. That's a pool. Think of a pool as a big cup, right? That's why ICT teaches you to look for relative equal highs and relative equal lows, because that's where the pool of liquidity is going to be created. Now, sometimes the market will create these pools of liquidity and it won't get touched for a long time. It may take a while for the market to want to come back into this time frame. But when you go to the monthly chart, overall we're still bullish, right? This is just a really good pullback on a weekly chart. But overall on a even much higher time frames, we're still bullish. So you want to be aware of all of these pools of liquidity, you guys. So that's going to be the video, you guys. I hope this one was very informational. I really tried my best to structure it well for you guys. Teaching this stuff is not easy, but I'm going to continue to try my best to, teach you guys all of the things that I'm doing. And because I study ICT for years, and this year was like, it's kind of been like a breakthrough year for me. And even still, I'm learning, right? I'm learning every day. And that's why I don't mind teaching, because I'm learning, right? So if you guys enjoyed this video, drop a like on it. Leave a comment down below if you guys have any questions or any things you want me to make a video about. Drop a comment down below. Subscribe to the channel. Turn on that bell. And you guys already know the best way to support this channel is to use code KRACKEN. If you guys are going to go buy a prop firm account, the top 4 companies that I recommend is Funder Pro. That's number 1. E8 Markets is number 2. Alpha Capital is number 3. Well, no, not even Alpha Capital, number 3. FTMO and then Alpha Capital, right? Those are the top 4 companies that I use. I don't have any thing against futures. I just don't like futures right now. I wish they would do a better job with the drawdown and some other things about futures, but nobody's perfect, because forex prop firms have their problems as well. So if you guys are going to go purchase an account, make sure to use my code and make sure to sign up with my link. The link is in the description below, you guys, and I will see y'all in the next video. Peace out.